Hi, and welcome to this discussion on budget 2025 from Omniscience Capital. So it's been few days. You all of you must have consumed a lot of information about budget. What are the different measures that the government has taken this year, and the tax cuts been hogging all the limelight. Uh, we here are here to give you a slightly different perspective in terms of what is Omniscience take on the budget this year. And Vikas, so the somehow the center stage has been taken by the consumption. You know the narrative was building that economy was slowing down, the
Correct.
consumption was not there, and some of the FMCG companies were not able to grow.
Correct.
Not that they were growing very fast earlier either,
Right.
but the blame was being put in that the urban consumer purchasing power is eroding, and
Right.
the government is not focusing or doing the job properly in terms of what it could have done. So this year's, like this budget, and I want to call it budget battle 2025 in between consumption and the capital investments.
Right.
So what is our take in terms of who has won in this budget? Is it really the consumption or the capital investments?
Yeah. So it's like the government has quietly increased
Hmm.
the capital investments as well, but somehow that is not in the news. That is not even in the speech. So it was not highlighted.
True.
What was highlighted was taking the tax slab for zero from 7 lakh to 12 lakhs. And definitely, given the narrative focus, as you said, that consumption is weakening
Hmm.
in India or urban India, and things are in trouble. And that was reinforced because of the FMCG's revenue either even shrinking
Thinking.
or
Right.
slowing, very slowly growing. Uh, of course, our take is different.
True.
That was not a signal of urban consumption being weak, but their product line being weak, right?
True.
Maybe somebody else is taking their market
Market
share. And that anecdotally we know that if you try to book a plane ticket or a railway ticket or a hotel, you can't find anything, right?
True.
So, and e-commerce is continuously growing.
Right.
So quick service delivery like the Zepto, Blinkit, all those things are growing.
True.
So if these things are growing, and Zomato, Swiggy kind of things, right? Of course, no, don't interpret it as recommending
Recommendation.
stocks.
Right.
Just trying to talk about consumption here.
True.
And so if those things were already doing well and growing so fast, so that kind of counters the FMCG consumption
Narrative.
narrative, right? Anyway, that's not the focus right now. But whatever it is, the government did a great relief, or a huge amount of money in the pockets of investors. Not investors, I would say consumers.
Right.
Right? They could be investors as well.
Right.
And about 1 lakh extra income
Correct.
to the typical middle class guy. So that's like somewhere between 10 to 20% extra income, right, in the
Right.
pockets, which is huge. So no doubt about it, that's a great step. That will give you money, and then you could use it in various ways, right? You could
Right.
use it to consume, but you could also use it for
Sure.
growing your,
So two questions. One is that additional 10 to 20% of the income that the average taxpayer, or in the target segment, is going to, where we expect that it's going to consume that extra money. And also, like, against this 1 lakh crore, if you can kind of put up context in terms of the capital expenditure, that how that the main element of the budget is playing out.
right. So 1 lakh per taxpayer
Right.
is getting extra benefit, and the FM put that this will have a foregone tax revenue of 1 lakh crores.
Correct.
Right. So that what government is losing is getting into the pockets of the people, and then it will find its way into the economy. Now it could find its way into what people are thinking, that okay, consumption stocks like FMCG companies will benefit, which is true.
Right.
So some more consumption there would be there if someone was pinching. That is there, but it's a substantial amount. And like you were just discussing in the morning, that if somebody is able to spend, let's say, 15,000 rupees in a small town
Right.
on rent,
Right.
and now he has 10,000 extra,
Right.
he can actually think of purchasing a
Purchasing
house
a
of
house.
about 25 lakh rupees. Right?
Absolutely.
This is affordable segment in a small town, tier 3
Absolutely.
town in India.
Yes.
3,
Yes.
4, whatever.
And given that there could be a rate cut as well
Hmm.
from RBI,
Absolutely.
even that cost, the EMIs can slightly be lower as well, as we go
Absolutely.
along. So
Absolutely.
that makes a strong case for uh, discretionary spend, especially the significant ones, right?
Yes. Yes.
Right.
So that actually would be the first focus of someone who's, running a family,
Right.
right? Somebody 35 or 45-year-old
Hmm.
has children, has family. That would be their first focus. That let me create a capital asset,
Right.
right, and reduce the rent cost and convert it into a capital asset
Capital asset.
investment.
True.
So that capacity is significantly increased,
Right.
right? Second, it could be durables,
Hmm.
like vehicles or automobiles.
Yes.
And again, the small businessman, actually, for him, the bigger house is also like a warehouse or a office space or a
True.
shop space, whatever, doubles up, right?
Right.
As well as that vehicle is a
Uh,
transport vehicle as well. So it's a business investment. Both of these are business investments as well for a certain segment.
True.
So that could increase the revenue for them,
Hmm.
which means also add to the GDP.
Correct.
So these two things, and then you come to the consumption side.
Right.
Again, consumption could be travel, tourism, like services,
Hmm.
or it could be the FMCG like products,
True.
right? Or entertainment, or and so on, right? Restaurants, entertainment, travel,
True.
many things.
Right.
And last, this could also find its way into the market,
Markets. True.
right?
Right.
So 10,000 extra SIP you can do now,
Hmm.
up to,
Okay. Right.
right?
Right. So obviously, so consumption is winning to a certain extent because
Absolutely.
of the extra money you're putting in people's
The
pocket,
economy is winning.
winning. And but then in the contrast, what is the size of the capex that we are still talking about? Because it didn't get any headlines,
Exactly.
practically.
Yeah. So that's the funny part, and that's why Mr. Market is blind, right?
Hmm.
I mean, we saw that when Apple was the largest company in the world, was
Was
crazily undervalued
true.
in 2015, right? So right in front of your nose, and you will be missing out. And it's roughly 16 lakh crores is the capital investment,
Correct.
and 1 lakh crore is the budget, the tax
Revenue.
foregone.
Right.
So there's no comparison. It's 16 times larger
True.
or 15 times larger, right? And the total budget size is 50 lakh crores.
Right.
So again, in 50 lakh crore, 1 lakh crore is just 2%.
Correct.
So the real hero of this budget was obviously capital investments.
Right.
But that was neither highlighted in the speech too much, and definitely not in the media narrative or in the popular mindset. So, but that's where you should focus. I mean, the numbers talk. Where the actual allocation is, we should take it extremely seriously, right?
Correct.
So that is what is going on. It's good that sentiment is improved for
Hmm.
the normal citizen,
True.
and so that will have a positive impact on the economy for sure.
Right. So I think that's exactly was my take when I looked at the budget announcement, because a lot of excitement was on the tax cut, and
Correct.
especially for everyone else is because their earnings are increasing, so people are happy about it. But our focus was completely on the capex side,
Exactly.
that how government will play that around, especially last year because of the budget and other the actual expenditure could not happen as per the target rate.
Yes.
So there was kind of short allocation on that side. But I think if we now look at the 2 year growth in the capital investments, it is around 11% or so, right?
Correct.
So double digit growth is being maintained
Yes.
with this year's target allocation of somewhere around 16 lakh crores, right?
15.5.
15.5
Yeah.
something, 15.7. So
Yeah.
so that's that focus on capital investments is something that I was very happy looking at,
Absolutely.
specifically on the focus areas like of the our key focus areas in terms of infrastructure, logistics, maybe defense,
Right.
housing, and so on.
Right.
So that gets a lion's share of this total capital expenditure,
Absolutely.
and that was something quite in terms of evident that the focus has not shifted or swayed
Not at
because
all.
of any external pressure or factors.
Not at all.
So that was quite positive.
Right.
uh, in terms of, as you said, the size of the budget, that itself has grown more than like 11% or so
Right.
over last 10 years. So we were at some maybe around 18 lakh crores government budget side, which is now more than 50 lakh crores.
Right.
uh, the interesting thing which we were tracking in terms of how that, so there's a source of money, and then how that money is, where that money is being put.
True.
Right.
True.
And what we have seen over the last 10 years, that the capital expenditure as a size of the total budget was around 20%.
Correct.
Now it is more than 30, it's around 31%
Correct.
today. Right.
Correct.
So that is a significant shift, and this is while your the whole budget size was growing. Right.
Correct.
It's nearly 3 times.
Correct.
So you can imagine that how clear the focus has been on the capital investments.
Absolutely.
Right?
Absolutely.
Again, just to talk about few growth numbers. Uh, while the budget has grown at 11% over the last 10 years, capital expenditure has grown at 15% CAGR.
Yeah,
CAGR,
that's
right?
very large.
And the revenue expenditure, which is your expense, which that has grown at 10%, less than 10%, for 9.6. So that we, like, kind of focus is pretty much set on the
Correct.
building the the infrastructure.
Correct.
Right?
And I think last 5 years it's even more stark.
Yes,
right?
yes. Last 5 years is around 19%, 18.7 to be precise. While the
Capex growth.
Capex expenditure, while the revenue expenditure is 4.3.
4.3 means it's barely keeping up with inflation. Right?
Yes, yes.
So you are actually holding the government at constant size,
right? Your
so
expenditure,
revenue expenditure,
right,
while you are
putting all the money,
nearly 19-20%,
right,
into capital investments, which
True.
will keep paying you back for
Back.
20 or more years. Right?
Absolutely.
20, 30,
Absolutely.
even 40 years.
Absolutely. So that's quite encouraging, especially if the last 5 years, there was, the government came out with a framework of national infrastructure pipeline in 20, let's say, I think March or April 2020 it was announced. And it talked about investing around more than 100 lakh crores.
True.
In various infrastructure projects. And from that point, you can clearly see the shift, as you're saying, like last 5 years, 18-19% growth in the capital investments. Right. And cumulatively, we have put, like, government target was to put from their end around 40 lakh crores. 40 lakh crore was supposed to be given by the state governments, and 20 lakh crore by the private sector. So that they have done more than 50 lakh crores over the last 5 years. Right?
Okay.
Together,
so government has put more than the 40%.
Yes.
Government of India.
Yes. And they also had broken it down, like that 100 lakh crore, where it will go, how much to energy and power, how much to roads, how much to railway, how much to housing and other this thing. So we have looked at those numbers as well, and we have seen that on most of the count, except for one or two, they have actually allocated more than what was the planned number. So they have done significantly better than what was planned, which initially was like just a big number you're throwing.
And that, how will you do this?
How will you this?
execute?
Right.
And now it's actually executed.
Right. So let's say we would be around 300 lakh crore GDP, and then say that, okay, 100 lakh crore of capital investment I'm going to do just in next 5 years.
Right.
While at that time we were what?
More than 30%. No?
Yeah,
Maybe we were barely 3 trillion or 2.5.
2.5, right.
So 30 to 40% of your GDP you want to spend in next 5 years.
Correct.
It's really large.
True. And that, like, that time before, we were doing like around 5 lakh crores of annual capital investment before that, or lower. And then 100 lakh crore was really a big number in the next 5 years.
Absolutely. So that now the annual number is 20 lakh crores.
Correct.
From 5 lakh crores.
True. Absolutely. So those are the things which, I think important point here is to, just like we keep emphasizing on the infrastructure companies, their revenues, their project, the nature of their is that long term, and then you can't go by quarter on quarter.
Absolutely.
I think that's the same concept we have to bring in here, that you can't just get disoriented by one quarter of GDP dip, or how the particular sector is not getting allocated in a particular budget in a year. Because that focus keeps shifting. We've seen that roads got allocation right from day one, or in the last 10 years if you look at. But just like housing and urban infrastructure is getting allocation in the last 3 years or so. Right? And for most of the allocations on the railway and, let's say, defense, in the last 3 years we are seeing a plateau. But the growth is not there, but the absolute number is actually very large, right?
Yes.
So we have to remain focused that it's not about the growth rate always. Sometimes it's about the quantum of money that you are putting in capital assets, and the focus will keep shifting, because you have to take care of certain aspects at every point in time. So that's why the report that we are just releasing is looking at last 5-year data, 10-year data, the long-term growth rates, long-term quantum of capital being put into the investments, and that gives a very reconfirming or reassuring picture on the Amrit Kaal vision. I think maybe we can touch upon quickly on that aspect as well.
Yeah, so it's like, see, budget is budget, right? It's the financial income and expense statement. Now, from that, you have to reverse engineer. If you see the series of budgets and some statements, then you are able to put together, reverse engineer the strategic framework, a strategic vision.
Correct.
It need not even be there all the time, but right now we think it's there. And that vision is Amrit Kaal. That vision is very clearly we have demonstrated that the Capex is happening. So follow the money, right? Follow the money trail, and then you decipher that what is happening. So following the money, we have already discussed that very clearly. The focus is on capital investments, right, compared to the revenue expenditure. And there is a reason for it, right? As you do capital investment, it kicks off economic growth, which throws off even more surplus capital, which you can recycle back to investments as capital asset creation, which will keep creating a virtuous economy, a virtuous cycle of the economic growth, right?
Absolutely.
Which is what we have seen with some other countries also. They have done that, and we are on that path. Now, phase one was the first last 5 years or so, when phase one of Amrit Kaal was when you were setting the digital and kind of GST and digital infrastructure that created a national marketplace.
Absolutely.
On paper, right? That now you could send goods from any point to any point without tax bottlenecks, right? You had a national marketplace with the digital infrastructure. Everyone could send money using their UPI and Jandhan accounts or whatever accounts, right? And there was platforms like Amazon, Flipkart, as well as now ONDC, using which you can now trade and sell things to anyone. So that first phase is over or nearly established. And the second phase of Amrit Kaal, which is the physical infrastructure. So right now, like from the capital investment point of view, that is what is going on, right? And that's likely to go on at least for next 5 years with large focus, and after 5 more years after that with a little bit lesser focus, because most of the infra would be in place by then. So that will take care of moving goods from here to there, where the Gati Shakti and the National Logistics Mission, etc., come into play. Because our economy has a very high cost of logistics at 14% of GDP. And the goal is to bring it to 7 or 8%. Right? So that's why the physical infrastructure, that if you using ONDC or Amazon or Flipkart, somebody sells from Madurai to Chandigarh, and that now you have to deliver the good from Madurai to Chandigarh, and for that you need physical logistics infrastructure. And that's the focus here in the budget for last several years, and that will continue being the focus.
So now there is a case to maybe revise the long-term GDP growth rate on the back of the kind of significant capital. So how do you model that? Like some pointers on that gives us visibility into how the country will grow.
So one is that let's estimate what is the next 5 years of additional Capex.
Right.
right?
Hmm.
So this year is about 180 billion, and it will be growing slowly at around 10% or so, 10,
Right.
11, 12%. So you can say roughly 1 trillion to 1.2 trillion over next 5 years.
Right.
Okay, is the capex from the government of India
Right.
budget. Now, if you take an asset turnover ratio of 1:1, which is quite common, right?
Right.
So that should trigger 1.2 trillion of additional GDP,
GDP. Right.
just the government of India's capex.
Correct.
Now, if you take that a similar amount, and this was in NIP also had the similar ratio,
True.
right? 40% government of India, 60% rest of the
Correct.
state government 40 and private 20.
Right.
Now, in some cases, it would be state government 20 and private 40, right?
Correct.
That's okay. But let's say 50-50. So if government of India is doing 1 to 1.2 trillion, the remaining private sector and state governments together are
Right.
also likely to do something like that.
True.
Maybe there is a lag, few years here and there. That's
True.
possible. So if 2.5 trillion, 1.2 plus 1.2, approximately 2.4, 2.5 trillion of capital investments is happening over next 5 years.
Yeah.
From 2030 onwards, we should expect 2.5 trillion of additional GDP. And we are roughly 4 point something.
Right.
So that would be like 6.5 to 7 trillion
Hmm.
just from capital investments. The effects of capital investment, which is
True.
typically productivity increases, right?
True.
And then there is the whole consumption side still remaining.
True. Right.
Right.
So yeah, so there is nearly that. I think this works out to double-digit growth
Yes.
for nominal GDP growth.
So 2030, we
right.
should be like
Right.
6 to 8.
True. And I think there are other studies or estimates which say that whenever you do capital investments, there are multiplier effect also on
Absolutely.
the GDP.
Yeah.
And
That's another way of.
yeah, and I have seen World Bank recent report that quotes around like a 2.5 uh, times multiplier effect.
Right.
There was
Niti
a
Aayog report.
Niti Aayog report also. It talks about 3.5 to 4.5 times, right? So there are various estimates, like maybe it's studies are done in different time frames and and logic. So, but there is another kind of upside to this as analysis that you just did, that when you do capital investments, there it typically has a multiplier effect because of the growth asset or the virtuous growth cycle.
And very quickly, qualitatively, we can think about it.
Right.
But suppose I create a new road,
right?
Let's say 6-lane road or something I've created in some stretch which was deserted earlier.
Right.
Now next to it,
Right.
the land will start getting valued higher.
Right.
Developers will come in.
Right.
They will start cleaning up the land, plotting it, and giving it for various uses.
Absolutely.
Let's say the lowest use is residential. Still, people will clean it up. Plots will be there. They will sell to the home buyers. Home buyers will come and start building homes there. Right. Means individuals or builders will come. They will build townships or housing societies. So you can just imagine that because of the road, what kind of next level capex got created. Absolutely. Right? Road and of course water pipeline and electricity. Just three things. Right. And all of this is triggered. True. And we're not even talking of industrial. Let's say this was an industrial location. And you give it to the company, the factory builder. He's going to not only create the factory infrastructure, but now he has to buy machinery, which is extremely high value. Right. So you can easily visualize the multiplier effect. True. That it should be much more than 1. Whether it's 2.5 or 3.5, that also can be estimated. Right.
Fantastic. I think so that summarizes our take on the budget and the long-term vision or the focus that needs to be kept while investing in the markets. And as Vikas summarized, that this is just like if you're like looking at a company and you want to look at multiple years of their cash flows, how the margins are moving, and so on. And that's where our analysis goes in terms of analyzing the Indian government as a company and how they have done
Absolutely.
over the last 10 years or so. And the other element of investing remains is the valuation part. Again, that is also something, though markets have remained little volatile, but the foreign partners are selling continuously for their own specific reasons, but creating investment opportunities for everyone who is looking at Indian market seriously.
Absolutely.
So that's a good thing. So while the fundamental story remains intact, in fact gets boosted with recent announcements. Valuations gives additional comfort of looking at you know like just creating it as an attractive investment opportunity for long term investors.
So let's talk about the growth factors and like,
Absolutely,
so
absolutely.
given the capital investment is a growth factor as a
Yes,
whole,
yes. I think
what
that
are
is
the other uh, growth factors? Like, how do we play this as an investor?
sure.
Most people would like to.
Yeah, absolutely. So, we have kept our focus, primarily on multiple growth factors. Off late, banking and financial services, power, uh, logistics, engineering, and engineering companies or construction companies, which basically are catering to the railway or logistics broadly as a space. And if
Or
we
roads.
or and roads, yes. So if we look at the the capital allocation that has happened, the in across these various segments, uh, it's quite like I'm quite amazed that over the last 10 years the CAGR of
Hmm.
the CAGR of the capital investments that's been done is somewhere around like 20 to 40%. For
Okay.
defense, one of our focus areas is been around 10%.
So annually it's
Annually
growing at
it's
20
growing
to
at,
40%.
yes, yes.
Okay.
So
Last 5 years.
roads has been around 40%.
Hmm.
But if you talk about power, if you talk about
Hmm.
housing and urban development, talk about railways, the CAGR, the growth of capital investments over last 10 years is around 20%.
Yeah, that's huge. Yeah.
So that has created opportunities, like like railways. If we were allocating something like 30-40,000 crores,
Hmm.
10 years back, today for the last 3 years we have been allocating more than 2.5 lakh crores,
Right.
and that is just government,
Right.
the budgetary support.
Absolutely.
Outside of it, the numbers are even higher, like
Correct.
including the the CPSE's their own allocations, or the
True.
private sector allocations, right?
True.
So in terms of growth visibility, order books, order pipeline, and fresh orders that these companies will continue to get, or the projects that the
Hmm.
company will continue to execute, I think we are very, very rest assured, looking at the capital allocation side. uh, the on the valuation front, I think uh, the most attractive space that we see, again, banking and financial services is something ancillary to this, which doesn't get directly featured in terms of the capital allocation, though. But I think that's the key fourth element of the whole, the Amrit Kaal vision. That's the financing
Absolutely.
of investments, right?
Absolutely.
So that is absolutely integral, whichever sector you talk about.
Absolutely. I mean, where is that 1.2 trillion coming from?
Absolutely.
Yeah.
So that, and the valuation, the growth versus valuation, and the attractiveness of the investment, from that viewpoint, I think power and
Banks.
banking and financial services is the
Absolutely.
most attractive space today.
Yes.
And while we continue to see a lot of traction on the mobility side,
Right.
and
Absolutely.
because and then the logistics and the other spaces,
Yes.
railways and
Yes.
logistics. Yeah.
Yeah. So most attractive is banks and financial services.
Right.
Second most is power. Third most is like logistics
Logistics,
and infrastructure,
EPC.
EPC,
Okay.
construction, engineering. Then housing finance.
Right.
Then railways.
Right.
No, sorry, mobility.
Mobility. Right.
Mobility, where electric vehicles or certain parts of it, right?
True.
And we can even play mobility through power,
Right.
that we've discussed in other videos or
Right.
reports.
Right.
Then there is beyond mobility, there is railways,
Right.
and then finally defense, which
True.
people are familiar with, that we've been
True.
champions of the railway
Right.
and defense as growth factors,
Right.
and we continue believing they have amazing growth opportunities.
Correct.
But few months back we were concerned about the valuations.
Right.
Now valuations have cooled down relatively well,
Right.
and maybe there are pockets of value there. But
True.
having said that, this is the range.
True.
We
Right.
still think there is alpha creation till here,
Absolutely.
and
Yeah, I think that's important because at the headline numbers,
hmm,
obviously, if you look at the small cap index
hmm,
PE or
hmm,
mid cap index PE, it's crazily high,
Yes.
much beyond our comfort range.
Absolutely.
But because the size of the market, like
Mm.
there are nearly more than 500 companies, which
Right.
typically you can classify as
Right.
small cap or 150. And interestingly, in the all the three spaces, we are able to find
Yes.
enough companies to create a diversified portfolio of, let's say, 15-20 stocks,
Right.
and still maintaining the valuations, in terms of, can you, like, while the mid cap index is at, let's say, 30 or 35 or 40, depending on which particular index you're looking at, can you create a portfolio which is at 15 p, still have the growth potential and
Right.
has the fundamental
Right.
strength of the companies? So answer is yes. So
Yes.
while everyone is probably saying that it's time to take money out from small cap and mid cap, and
Right.
but if you are doing the job right,
Mm.
and understanding that how you are stacking up the portfolio, there is still an investment opportunity,
Absolutely.
to be made.
Absolutely.
And for, especially for long term investors, because markets, while the correction happens, everything is gets
Right.
sold off.
Right.
So it's not that the portfolios will not, the undervalued portfolios will not fall when
Right.
the market corrects. That's not the point
No,
I'm
of
trying to
course it will
make.
fall. Yeah.
But for the long term investors, there is an amazing opportunity, right?
Right. Which brings me to the asset allocation on
Right.
capitalization. So a lot of people are invested in mid and small cap mutual funds, right? The
Right.
Amphi data itself shows
Sure.
that there is huge allocation for
Right.
last 2 years or maybe more
Right.
purely to small cap and mid caps and
Right.
some thematic funds,
Fun.
and hardly anything going to large caps
Right.
or multi caps or flexi caps, right?
Right.
So what do you think about that? When the
Hmm.
P is 30 and 40,
Hmm.
even after a fall in the mid and small cap,
Right.
and people are allocated to those funds, and the P's of those funds are also like that. While we are able to find
Right.
the small cap portfolio with 15p or
Yeah.
20p,
Right.
or a mid cap portfolio with
13,
13, 14,
14p.
15, 17p,
Right.
the typical mutual fund portfolio is 30, 40p or even
It's
higher
very
than the
small.
benchmark
Higher
actually.
than the benchmark. Right. Right.
So what do you think
Hmm.
they should do now?
Absolutely. So if that is your portfolio, you should definitely evaluate,
Hmm.
in terms of the valuations, and not
Hmm.
look at the past returns
Hmm.
only,
Hmm.
but look at a very fundamental analysis in terms of, what is the valuation multiple
Hmm.
of your
Hmm.
portfolio. And then you should take a call that if it is not, like, most of people don't even have an intuition that, what is the overvalued and what is the
Correct.
undervalued. And sometimes, because the growth of the price of that is high, so you will
Right.
say that, okay, for high growth,
I
high,
justify high
high
P
p
is
is
justified.
justified.
Yeah.
But that's the difference in terms of, when you actually get down to the fundamental basics and take a call.
Right.
So there are opportunities, and specifically if you have a long term horizon, there are multiple portfolios that are available where the capital can be allocated.
Perfect.
Great. So hope you enjoyed this budget discussion, and the focus that we are trying to bring on the long-term capital allocation and capital expenditure that the government is focusing on, and makes a good case for select sectors that we have discussed in this webinar. Thanks for joining.
Thank you.
So always keep in mind that investment in securities market are subject to market risks. Read all the related documents carefully before investing. And also that registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors.